Argentina's chronic economic struggles, characterized by persistent inflation and macroeconomic instability, have reignited the debate surrounding dollarization, which is the adoption of the US dollar as the official currency. The economic landscape of Argentina is currently marked by a decline in GDP, a staggering inflation rate that has surged from 54% in 2019 to 250%, and a national debt valued at $44 billion, which was less than $10 billion 5 years ago. The exchange rate has also seen a dramatic shift from 63 pesos for $1 in 2019 to 950 Argentine pesos per US dollar. Argentina's economic crisis is deeply rooted in long-standing government practices marked by corruption and mismanagement. The unchecked fiscal irresponsibility has led to ballooning of national debt, while the practice of printing money has fueled hyperinflation, eroding purchasing power and causing prices to skyrocket. Meanwhile, currency controls aimed at keeping exports artificially expensive and making foreign debt repayment cheaper have created economic distortions that undermine financial stability. Collectively, these corrupt and mismanaged policies have driven Argentina into a state of chronic economic turmoil, exacerbating inflation and debt while crippling economic growth and stability. To solve Argentina's economic crisis, Javier Milei and his government are recommending dollarizing the currency. Dollarization involves a government's formal replacement of its national currency with the US dollar for all monetary functions. Currently, 11 countries use the US dollar as their currency, of which 3 are South American countries, that are Panama, Ecuador, and El Salvador. This currency substitution usually occurs when a country's currency loses its usefulness due to hyperinflation or instability. The potential benefits of dollarization for Argentina are highly appealing. One of the most significant advantages is its potential to tame hyperinflation. Argentina, facing its highest annual inflation rate in 3 decades, could see immediate relief from inflation by anchoring its currency to the relatively stable US dollar. Furthermore, dollarization would enforce fiscal discipline by removing the central bank's ability to print pesos indiscriminately to finance government spending. Additionally, a dollarized economy would eliminate currency risk, thereby boosting investor confidence and attracting much-needed foreign investment. This influx of capital could spur economic growth and job creation, helping to revitalize Argentina's struggling economy. However, adopting dollarization is not without significant risks. One major drawback is the loss of monetary sovereignty. By adopting the dollar, Argentina would forfeit control over its monetary policy, a crucial tool for managing economic cycles and responding to shocks. This could limit the government's ability to stimulate the economy during downturns. In economically unstable country, dollarization would result in a direct outflow of dollars from the country, and without any monetary sovereignty, the country is unable to control the flow of movement of dollars, which would further destabilize the already severe economic conditions. And without a national currency, Argentine economy would be directly impacted by decisions made in the United States. Dollarization also reduces a country's ability to use monetary policy to regulate economic growth, and a country that dollarizes voluntarily forfeits its ability to control interest rates on government loans. Another concern is reduced export competitiveness, as dollarization may make Argentine exports more expensive and less competitive in international markets, potentially hindering overall economic growth, particularly in export-oriented sectors. Furthermore, reduced government spending due to fiscal constraints could stretch social safety nets thin for the already vulnerable population, exacerbating social inequality and unrest. The impact on Argentina's relations with China is another critical concern. The continuity of the currency swap line between the Central Bank of the Argentine Republic and the People's Bank of China, which has played a pivotal role in averting default on Argentina's obligations to the IMF, would be jeopardized if Argentina's central bank and the peso were to be abolished. This raises important questions about who would manage the unwinding of the swap line with China. Milei's chief dollarization strategist has suggested establishing a dedicated fund to manage the country's reserves and short-term peso debt. While the primary focus of this specialized fund is to repay the $26 billion of debt instruments held by commercial banks, but there has been no discussion about addressing the debt resulting from the currency swap arrangement with China. And if the problem remains unsolved, this could bring more debt problems for Argentina and would jeopardize the relation between the two countries. Ecuador and El Salvador provide recent examples of countries that have attempted dollarization in response to similar domestic dysfunctions. In 2001, El Salvador initiated dollarization as part of a broader program of liberalization and privatization to attract foreign credit for national development. While dollarization led to decreased interest rates on loans made to businesses and financial entities, these loans mostly benefited the already established upper class, as business outside the upper class had little access to the loans. Additionally, in countries that do not control their own monetary policy, competitiveness can only be achieved by lowering wages. As a result, the poorest sectors of El Salvador became even more disadvantaged due to receiving lower wages. Similarly, Ecuador dollarized its economy in 2000 to control severe inflation and attract foreign loans. Although this achieved the expected measurable results, such as reduced inflation, it did not lead to the anticipated increase in innovation and productivity in export sectors. Given the structural economic similarities between El Salvador and Ecuador prior to dollarization and Argentina now, it is reasonable to assume that the same sectors that benefited after dollarization in those countries would benefit in Argentina as well. Adopting dollarization is likely to reduce inflation rates in Argentina, but empirical analysis suggests that it could also lead to a slowdown in economic growth, potentially causing more severe economic problems. Moreover, it would be difficult for Argentina to revert to its national currency in the future. Therefore, the decision to adopt dollarization must be made with careful consideration of both its potential benefits and its significant risks. Although it is crucial to recognize that dollarization is not a one-size-fits-all remedy and does not offer a comprehensive solution to Argentina's economic challenges.